Amit, why don't you come in on the market perspective as well? You know, up until now, we were seeing the markets trade in a very range-bound sort of a manner. Yes, there was immense volatility, but the range was something that was fairly restricted. But we're seeing a sudden blowout in the markets in the last, couple of sessions. What is your view on Nifty? Do you think it will continue to be extremely volatile, or is, finally there is some kind of an uptick that we can now look at?
Hi, thank you for having me on your show. See, 2018 is going to be a volatile year, and the large trends will be created. If the large trends will be created, I'm having some problems with this thing. 2018 will be a volatile year, but you need to look at large trends, right? So the biggest trend for the last 10 years has been consumer. The stocks within the basket has kept changing, but broadly consumer stocks like B2C spending is what has created a lot of wealth. It started in 2009 with your Hawkins and your cooker stocks basically, and those stocks went up 20, 30, 40 times. Then in 2013 from your kitchen, it shifted to your room. And you had your from your kitchen it shifted to your bathroom, and you had your Serra sanitary ware, Kajaria ceramics, and those kind of stocks went up 20 times. From your bathroom it shifted to your kitchen, to your room, and your AC stocks like Whirlpool, your cooler stocks, Symphony, those were the stocks that created wealth. 2017 again was about retail with the listing of D-Mart. You had your future retail, V-Mart, D-Mart, those kind of stocks went up 4-5 times. So right now, the market focuses on consumer stocks. So alcohol stocks, hotel stocks, aviation stocks, those will be the next trends which we believe, and that's where the big alpha would be created. But market specific, you will not get much action like 100, 200, 300 points on Nifty. That is not what we do.
Amit, I must congratulate you on extremely interesting observation, but what I understand from it largely that Indian markets investors have made money by staying indoors for several years now, and now is the time to go out, party, travel, and hence you are bullish on alcohol stocks, aviation, but there are a bunch of them, right from Som Distilleries to United Breweries, United Spirits, some others, Radicos of the world on alcohol, and 3 big companies on the aviation. What is your preference looking like, or at least on the fundamentals, which companies are doing well?
See, aviation, I am very extremely bullish, and I'm bullish on the market leader. See, you can buy the whole pack, but we like to stay with market leader on the aviation side. The market leader is gaining market share even after being 40% market share. It will keep gaining market share. See, I'll tell you one thing. Market leaders, it's not possible for them to get out of business. So like, let's take an example of Maruti. Maruti was market leader 10 years back, it's market leader today. HDFC was market leader 10 years back, it's a market leader today. Asian Paint was a market leader 10 years back, it's a market leader today. So the no-brainer trade is always buy the market leader. So the market leader in aviation looks good. In alcohol, I would buy the second largest company. See, the thing in alcohol is what made these stocks rally so much was basically molasses prices going down. Molasses is basically the key raw material for alcohol companies. Molasses is broadly 14% of the total revenue. Now the prices of molasses have gone down 90%. That means if the companies were making a margin of 10%, they straight make a margin of 25%, and your profits go up to 100, 200, 300%. So that is what is happening in alcohol companies. But I think now the re-rating has happened, and now these stocks will not trade at the alcohol companies in India, except for United Spirits and United Breweries, basically the market leader, have never traded more than 15-16 P multiple, never ever. But now I believe the P's will change to 30-35, and that will be the new normal P ratio for alcohol companies going forward. So on alcohol companies, I'm not betting on the first guy, but on the second guy. But on aviation, it's the market leader.
Right. Amit, I was also going through a couple of pointers. You're also betting big on the steel sector. I mean, we've seen a fantastic rally combine the entire commodities pack, but steel is something that, of course, is on an upcycle, and you are giving it a thumbs up. What is the kind of growth that you see in that particular space, and what are some of your favorite picks out of within the sector?
So in steel cycle, we've been very bullish for last few months. The prices of steel was 35,000 rupees per ton 6 months back. Today, the prices of steel is 48,000 rupees per ton. So broadly, there's a 13,000 increase per ton prices. Now, if you are an integrated steel player, your cost remains the same. Let's say the cost was 33,000 depending on the player. Now, the markets were expecting that these guys will make 4,000 rupees per ton. But now these guys are going to make like 12,000 rupees a ton. So the steel cycle is just getting started. You will see a lot of money getting made. The earnings this quarter will tell you that what I was saying was true. You will see, I was in Raipur and we met a few dealers, a few wholesalers, a few steel manufacturers as well. And the cycle is like whatever they have lost in the last 7 years, they will recover in the next 1 year. So that's how huge the delta is, and we buy delta and not delta corp. But that's where the big money would be made. So next 1 year, I expect steel stocks can rally up to 100%. We hold Prakash Industries. It's very cheap at these levels. We also hold Jindal Steel and Power. These are the two steel stocks that we've been holding. But these are momentum stocks for us, and we can exit anytime when we think the cycle is played out.
Deltin, perhaps you go there after you make a lot of money from the markets, you utilize their facilities or not at all?
No. So, the thing is that when you gamble all day, all week, why waste the weekend doing that? So,
well, clearly we are discussing in a lighter vein. People should not feel that stock market is gambling. It's a hell lot of work and a lot of analysis. So, come back to analysis. I want to understand from you, the metal pack got re-rated, favorable cycle, but non-steel stocks also got, value added or ancillary stock, graphite stocks, many other stocks, where they've become extremely volatile, and people on the one hand believe the cycle is still favorable, others say they've already become multi-baggers, so time to be cautious. What is your call on non-steel side of the, the metal pack?
See, on graphite, we exited early, right? We bought when the promoter was buying. See, it's very important to buy, like why did we buy the steel cycle? We bought the steel cycle when 6 out of 10 commodity like steel companies were buying their own shares. We bought HEG for ourselves. It was a 4-bagger for us in 2-3 months. So we bought HEG at 500 bucks, and I did, like everyone knows this, and it was a 4-bagger for us in 3 months. We were buying when promoters were buying. Right now, there's so much uncertainty. You should not be on those kind of trades. One more thing, look at Tokai Carbon and Showa Denko. These are Japanese companies who are in the graphite business. These stocks are now down 30%. And so graphite is not a local, it doesn't stop at HEG and graphite, right? Even Graphtech, which got listed in the US market, the expected IPO price of that was $21, but it got listed at $15. So the markets are telling you that this is the time you take at least 90% of your chips off the table. If I was long graphite or HEG, I would not stretch my luck too much. So at these levels, I'm not so bullish on these stocks. The risk reward is not favorable. They might go higher, but the risk reward is not favorable. But steel stocks, the promoters have just bought like 3 months back. So that's where I'm super bullish on.
And Amit, what's the latest update on the road stocks that you've been holding? You were fairly upbeat on that space as well. What is the kind of view that you hold at this point of time?
So I was in Jaipur like last week, and that's actually roads are the reason why our portfolios are hitting lifetime highs. So that trade has worked very well, and even now our portfolio is very close to lifetime highs. So the reason road is a very high. If you see the numbers which are going to come out this quarter, it will be very surprising. The street will be very surprised looking at the road numbers, and I'm very confident on this trade. See, the thing is that if BJP comes to power, we make 100% returns, because markets will say 3-4 years these companies will keep growing at 30-40%. If BJP doesn't come to power, we probably face some volatility and lose 20%. So after October, the volatility will start coming in the sector. But before that, companies like Dilip Buildcon, one new Jaipur based company which we've bought first day first show, those are the kind of companies which like the Jaipur company which I'm speaking about, that will grow at 40-45% for next 2-3 years. So you have to buy on large trends, and there is no competition. Where is L&T? L&T was 23% market share consistently from 2007 to 2016 of the total pie. Today L&T has not bid one project. There is absolutely no competition. This is like a very nice time to be on the road construction party. We are playing this party. We are nowhere close to the exit gates, but let's see what happens.
Amit, on the small and mid cap space as a universe, you look at that space very closely. A big clutch of those stocks have actually rebound 20-25% from recent lows, when markets have rebound 5-6% from recent lows. Do you think time is ripe to get back into mid-small, or do you think only a very small portion will move up, remaining of the portion may spend some more time before buying interest may come back here?
So if you're buying high quality market leaders and all those kind of stocks in mid cap, small cap, then it's okay. That's not bad. But overall as a basket, it will take more than 1 year to hit a new high. I'd send you the chart, Ajaya, but broadly it will take more than 1 year for mid caps and small cap to hit new highs. This space is over-owned right now. The valuations are not cheap, and this is not the time. This is basically at 25, the bad stocks are now at 20p, the good stocks are at 35, 40p, and the great stocks are at 60, 70, 80, 90p multiple. And this time, what do you buy? So, I'm not saying they cannot go higher or lower, but just that risk reward is not in your favor. And my understanding of markets is that it will take more than 1 year. So every 3 years, let's just understand this properly. 2004 was a small cap rally. Then 2005-06 they didn't do well at all. In fact, they gave negative returns. 2007 was a large small cap rally, and that was end of the cycle. 2010 was a very large small cap rally, and your small cap index went up. So every 3 years, 2014 was again a big small cap rally, and then 2015-16 no one made money on small cap. That same thing happened in 2017, that there was a huge rally. Now 1-2 years small caps and mid caps, you will not make a lot of money, and then like every 3 years this cycle happens. So they get over-owned, they get very expensive, and then they correct, and that's just normal. So it will take more than a year. I do strongly believe that it will take more than 1 year for small caps and mid caps to hit lifetime highs again.
Right. All right, Amit, we'll let you on that one. Thank you very much for your time. Perhaps we'll catch up sometime to sample some of the products of the sectors you like. We'll do that one of the weekends here.